Hello everyone, I'm Chloe Johnson and welcome to this Fresh Business Thinking webinar with Allard Bailey. Allard Bailey specialise in helping entrepreneurs, directors and investors to protect their professional interests from personal life events so they can achieve their lifetime ambitions and leave the legacy they intend. This is the first in a three-part webinar series, and today we'll be discussing how using the law you can align your professional and personal objectives. I'd like to introduce to you our speakers today, Louise Allard, founding director of Allard Bailey Family Law. Louise has over 16 years experience with family law, including divorce, separation, adoption and surrogacy. Her clients come from all walks of life, including entrepreneurs, company directors, investors, shareholders and their spouses. Joining Louise for this webinar is Sangeeta Rabadia, Senior Consultant Solicitor, Allard Bailey, advising business owners, directors, investors and their families on wealth and succession planning, as well as disputes regarding wills, trusts and estate matters. She helps entrepreneurs to protect their business from the operational impact of their absence with business lasting powers of attorney and business wills. Louise and Sangeeta will be talking around 40 minutes and then we'll have some time for Q&A. If you do have any questions, you can leave them in the Q&A function at the bottom of your screen and we'll do our best to get to them later on in this session. There will be a poll at the beginning and the end of the presentation. Please note that the answers to this will be anonymous. That's all from me and I'll pass over to you, Louise and Sangeeta.
Thank you, Chloe. Well, good afternoon, everybody, and welcome to our first of three sessions. As Chloe said in her introduction, we are going to be talking to you today about how the law can help you align your professional and personal objectives and goals. And I suppose the first question is, what do we mean by that? Well, we all work hard. Most of you who are watching today are business owners. And why do we do this? Well, we all have personal goals that we're all trying to achieve, and really what we want to do is talk about, could you be doing more using tools, structures, perhaps laws that are already out there to achieve your goals and achieve them faster? Or are you actually potentially frustrating your personal goals by not taking best advantage of what's out there? And why would we be the people that you should listen to? Well, as Chloe said, we are from Allard Bailey Family Law. I am Louise and I am one of the directors of the business. And Sangeeta is one of the solicitors in our private wealth department. And private wealth solicitors are really in a unique position to be able to have an overview of both your business documents and your personal documents and make sure that all of those documents and all of those structures really support each other and help you achieve what you are wanting to achieve. And I think at the moment it's a really good time to do that. We've all been given a very unique opportunity in a way in the last few months to step off the roundabout and stop and think about, what are my goals? A lot of the time as business owners we are very involved in the doing, and we don't often have time to think about what it is that we are trying to achieve. And so the very first thing we're going to do is I am going to ask you all a question, and let me see if my IT skills, if we're going to manage this, there we go. Okay, I'm going to ask you all a quick poll which should pop up there. Do you think your business is structured in a way that will allow you to achieve all of your goals and ambitions? Oh, that's quick, that's quick. Okay, so it's completely anonymous. We're going to give you just, I think, 30 seconds or so to answer the question. And I think you can all see the results on your screen. Okay, so at the moment, 29% of you don't know. And 56% of you are pretty sure that your business is not structured in a way to achieve your goals. So let's hope we can perhaps help with that today and give you some hints as to what you might be able to do. So yeah, that's the end result. There's 56% don't or know, and 28 don't know. So 17% of you are sure. So we'll take that poll again at the end of our talk and see if you're still in the same place. Today, as we said, is the first of, I'm going to just remove that, I think, is the first of 3 parts Today we're going to just talk about aligning your objectives. So really looking at, what are your goals? What sort of things do you need to look out for? On the 17th of November, we're going to be talking about protecting your business, that things happen in your personal life, and we experience that all the time with our clients, that things have happened that are perhaps unexpected, and what steps can you take at this stage to make sure your business is going to be protected. And then in a little more detail in January, we're going to look at the impact of personal relationships. Relationship breakdown, unfortunately, is a fact of life, and what steps can you take to try and make that as painless as possible at this stage? And do you need to take steps? Are there things that you need to do to protect your business? So today, I said we're going to look at aligning your objectives, and Sangeeta is going to talk to us about 4 main areas, really. The structure of your organisation, some agreements you have in place, perhaps how do those agreements that you have in your business domain interact with perhaps documents or plans you've got in place in your personal life, because the message we really want you to get today is they interact potentially much more than you think. And we'll be talking a bit about tax just to wake you all up midway through, and then we'll be looking at some special provisions for perhaps some vulnerable family members that you might have. So without further ado, Sangeeta's going to talk to us a bit about what your goals might be and the sort of things that we think that would be helpful for you to think about. Sangeeta.
Thank you, Louise. Hello, everybody. It's really great to be able to be here today to talk to you about this. As Louise mentioned, I am a private wealth solicitor, and I've been doing this for about 8 years. And one of my passions is to help entrepreneurs like yourself to ensure that you are achieving the maximum and the most efficiency in trying to achieve the goals and the objectives that we're going to talk about today. Now, all of you will have different lifetime goals. I doubt very much one person will have the same as somebody else. And at some point in your journey, you have decided, or most of you have decided, that setting up a business is going to help you achieve those goals. Some of you out there may be thinking, well, actually, I wanted to set up a family business and leave a legacy. And that's the reason why you set up a business. Others may have wanted to make a social impact. So you've decided to set up a business for charitable reasons. Some of you may be innovators and really inventive, and so you want to change the world. And some of us out there will just be thinking, well, actually, I just want to work for myself. It doesn't matter what reason you've actually chosen to set up your business for. The key is going to be the way in which it is set up and how that affects those goals and the achievement of the objectives. So the structure is something that we're going to talk about at the moment, and the structure of your business is going to impact a number of things, and the first being your operations. So how is your business going to operate? And that will be very determined on the way in which your structure is set up. Also, the way in which you take out funds from your business, that's going to have a huge impact. The structure is also going to impact the way in which you are able to pay tax, and also the amount of tax that you pay as well. And ultimately, it will end up affecting or impacting the way in which you choose to sell, transfer, or pass down some of the business assets that you have. Now, today, generally, businesses are set up as limited liability companies. So I'm going to concentrate on that scenario, but most of what I talk about today is going to be just as applicable if you have a partnership or if you're a sole trader, and even within those there's lots of different variations. So if we talk about the variations, then I mentioned earlier that some people may have set up their businesses because they wanted to make a social impact on the world, and if that's something that you are looking to do, then one of the structures that perhaps you could be thinking about is, how do I continue that philanthropy? What is the most efficient way in doing that? And sometimes the answer may be that you set up your own charity or foundation so that that work can continue. For those of you who have decided that actually I want a little bit more protection or anonymity, then it may be that your structure of your company is set up with a trust where the company is held within a trust structure so that you can get that level of protection that you're looking for. Others, after having taken advice, you may decide that actually I want to hold the company assets in my own name as opposed to the company's name. Again, the benefit of this is that it provides that extra level of protection, especially from creditors, and also depending on what your goals are, it may help you achieve them better. Others who have a limited liability structure, as I've mentioned earlier, you may decide that actually I want to spread the wealth amongst my family. So I want to make this a family enterprise. And if that's the case, then perhaps we should be looking at whether your shares are held in the right way. And one of the ways to talk about that or think about that is who is going to actually control the company, who's going to be running the company, and who is going to be perhaps a shareholder and just receive the benefits by way of dividends. Now, again, it doesn't matter which structure you want to adopt or which structure that you choose. The key is that you need to think about the impact that's going to have on your personal life and how that's going to affect personal relationships and ultimately the goals that we're going to be talking about today. Now, our third seminar, which Louise has touched upon earlier, is going to go into more detail about that, but it's just something that I want you to think about as we go forward today and think about structures and some of the other things that we're going to be talking about today. I want to give you an example just so that we can put it into perspective. I had a client whose shares, this was a pharmacy setup, and part of the client's ownership was shares that were held in a trust for the benefit of the family children. At some point, the trustees decided that those shares needed to be put out into the children's name because there was some benefit of doing so at the time. And so the shares were transferred outright into the children's name. A few years later, my client decided he wanted to sell the business. And he's undertaking the business sell process and realizes that he can't actually sell the shares that are held in the children's name because they can't give valid consent. Long story short, we ended up having to go to court to seek permission from the court so that those shares that were held in the children's name could be sold. Now, this is a really good example of how short-term goals don't necessarily marry up with your long-term objectives. So it's really important that you start having that conversation about what is it that you're actually trying to set out to achieve and how are you going to be able to do that. I know most of you out there are probably really young. You've only just set up your business or are thinking of setting up your business, nowhere near thinking about retirement. But I think this is a really good example to show that you don't have to be at the retirement stage to start thinking about what is retirement going to look like, because retirement will be determined by the way in which you actually operate your company and the way in which you structure it. So it's something that you want to start thinking about now, even though it's something that's not going to happen anytime soon.
Thank you, Sangeeta. That's really helpful and just gives us some examples of why it's really important to make sure that your business is set up in the correct way from the start. And is that something, Sangeeta, that you think an individual or a company should be reviewing on an ongoing basis as they go along?
Yeah, I think the ideal place to start is when you actually set up your business or when you're very young, and that's the time that we can optimize the way in which your structure is set up and obviously make efficient use of all the opportunities available. But as you mentioned, Louise, earlier, things change as you go along. So it's always good to review the structures to see if they're still working for you and still achieving the objectives that you're setting out to achieve.
Yeah, thank you. So the second thing that we're going to talk about today is just touch on the agreements. Now, what a lot of people don't realise is that shareholder agreements or other business documents, it's really important that they interact well with personal documents that you might have. So for example, many of you might have a will or a prenup or a postnuptial agreement, or even you just may have had some binding discussions with a partner, a family member, or a friend about what you want to happen to a business. And it's really important that the structures that you have in place on the business side actually complement whatever agreement or document you've got in place in your personal life. And that's something that you've found a lot in practice, isn't it, Sangeeta?
Yeah, I agree. It's really important that your business documents and your personal documents sync in well together, because without it, you could find that yourself or your loved ones end up find themselves in a bit of a mess. And what I say, Louise, you mentioned wills a little bit earlier, and as business owners, your will ultimately dictate what happens to your business when there is a scenario of death within that business enterprise. And what I find is that not much thought tends to be given as to how that will work out in practice. So, I mean, death is not necessarily the most glamorous word, and it's something that we don't like to talk about. We bury our heads in the sand, but it's also one of those things that unless we do give it some thought, then we're going to find that our loved ones, our businesses, our business partners are going to end up in a bit of a pickle, and they're going to have to do a lot of work to try and unravel it all. For those of you out there who have limited companies, for example, I would be recommending that you look at whether the cross options within a shareholders agreement actually work for you and for your family. A good cross option agreement will ensure that your family and the other shareholders within that business have the options to sell or buy your share of the business when you're no longer around. However, I find that usually when I come across shareholder agreements, that sometimes the poorly drafted ones, shall I say, have cross options or clauses within the shareholders agreement which force a sale. Now that's obviously going to put your family in a bit of a situation if that's not what you intended to happen, but also what a lot of people don't realize, that ultimately impacts the amount of inheritance tax that your family pay on the share of your business. So it's really important to have a look to see whether the cross options are there and they're right for you. If we take the partnership scenario, again, if you don't have a partnership agreement in place, or you don't have a well-written agreement in place, a lot of people don't realize that partnerships dissolve when there's a death within that partnership. So ultimately that means that your business has to stop and the assets within the business are sold and split up. And again, that's going to cause a lot of disruption to you, your family and your business. And by just making sure that the agreements have these correct options in place and have the correct terms, that's ultimately going to ensure that your business is passed over smoothly and there's little disruption to the business operation and ultimately to your partners and your loved ones as well. Things like partnerships are built on trust, just like relationships like marriage. And no doubt, as Louise will agree, marriage and partnerships are situations where we think or we hope that nothing's going to go wrong and we hope for the best. But there are situations where sometimes things can go wrong, and agreements like this are going to ensure that when that does happen, if it happens, then there is a scenario to say, right, how should we then resolve this or deal with this? Just going off on a bit of a tangent, I once had a client who found himself ill, and he was in a partnership with a friend of his, a very trusted friend of his. Now this client of mine unfortunately had to have both of his big toes amputated, so you can imagine he wasn't concentrating on the business whilst he was getting well. His trusted friend took over the operations of the business and was running it, as my client thought, well, the business itself was a bar and restaurant. And it wasn't until my client started receiving lots and lots of letters from the HMRC demanding tax that hadn't been paid, that my client looked into the situation and he realized that this so-called trusted friend had actually been embezzling from the company, hadn't been paying for the tax liabilities and hadn't been paying the rent. Okay, and you won't be surprised to hear there was no partnership agreement in place. And in the end, my client, who was very ill, had to go to court to decide what was going to happen to this partnership and all the assets within it, because the trusted friend obviously wasn't doing a very good job, but he'd also stopped talking to my client. So he found himself in a lot of mess, which he had to then unravel. And so I think that's a really good example to show how having the right agreements in place can really resolve and prevent something like that from happening. The connection, or the other thing that I want to talk about with this scenario, is that it impacted his personal life, not just health-wise, but monetarily as well. When your business, or the way in which your business is run, and how well your business does, is going to impact on your personal affairs, especially when it comes to things like your credit rating. Now, this client of mine, it impacted his credit rating quite badly. So he wasn't able to renew his mortgage. He wasn't able to take out a personal loan. And that's the sort of situation that you don't want to find yourself in. The other really important thing that sometimes even is overlooked is when there's no will at all. And without a will, the law will dictate what happens to your estate and the assets within that estate. And that includes your business or the shares within a business. Now, a lot of people may think that actually when I die, it doesn't matter if I don't have a will because it will just go to my spouse. Now, unfortunately, that's not what the law says. The law will actually say that a part of your estate will go to the spouse. So therefore, a part of your business will go to the spouse, but the rest will be split and shared with your children. Now, in practice, if you have a family home or you have a business and decisions have to be made, that's not going to be very practical, and it's not going to be efficient, and it's also not going to work well perhaps for your spouse or provide the protections that you need. And sometimes it can also impact the amount of inheritance tax that is paid on the first death of you and your spouse, because usually if you do have a will in place, the inheritance tax liability can be deterred to a later date. There can be added complications as well. So if, for example, you're in a blended family and you have a stepchild that you want to provide for, the law doesn't automatically recognize stepchildren. So you have to make sure that you have a will which expressly provides for that stepchild. If you're not married and you're young and you're living with your partner, so you're cohabitating, again, the law does not allow for provision for that partner. And so again, you're going to have a will in place to expressly ensure that that partner is going to receive something from you. And that's one of the reasons why I say that you shouldn't be waiting until you retire to execute a will. The first advice that I give to a lot of my clients, if not all my clients, is that the moment that you have a bank account, the moment that you have or you own £1 in your name, is when you should be thinking about having a will in place, even if it's a simple will. Now, a lot of you out there, a simple will may not work. You may need to have something more complex and have a business will in place, and that's fine. But you should have something in place so that there is some certainty out there for you, for your loved ones, and for your business as well. Having a will, and I think sometimes this is underappreciated, having a will can actually save you hundreds and thousands of pounds, and it can prevent a lot of disputes that you may not actually foresee or envisage taking place, especially when you're not around. Now, I had a client actually not so long ago who had a business. So he had a photography business, and he found himself in a situation where his father had passed away and hadn't put in the necessary documents in place to support and provide for him and his family. Long story short, what happened was that my client ended up fighting with his sister because the documents in place weren't suitable. He ended up spending a lot of money fighting his sister so that he could receive his inheritance. And that really impacted his business and his ability to work on his business. And turns out the sister was just trying her luck. She knew ultimately that my client had a right to the inheritance, but she was just trying her luck because she realized that the documents in place were insufficient. And if we're really honest with ourselves, we all know somebody within our lives who are going to take every opportunity they can to take advantage of these sort of situations. So what I advise my clients is, let's make sure the right documents in place. Let's make sure that you have the terms in place and you have the right succession planning to ensure that those opportunities don't arise. Now, some of you out there may be thinking, well, I'm really young, I don't need a will at the moment. Or, you know, why do I want to worry about inheritance tax? I'm not going to be around, so who cares? Now, if we go back to what we've been talking about earlier about the life goals and the life objectives, if those life goals and those life objectives include loved ones, and they include spouses, they include children, they include business partners, then the amount, all these documents are going to have a significant impact on them. So it's really important that you do have that in place. The other thing that I find that's often overlooked in a scenario is the event or the potential event of you finding yourself to be incapacitated. Now, by that, I mean, you haven't passed away, so your will won't come into place, but you're no longer in a position where you can look after the business yourself. So let's ask ourselves, if that happens to me, who's going to sign my contracts? Who's going to access my bank accounts? Who's going to pay the utility bills? Who's going to pay the employer's wages? And quite often, without effective planning, the impact that's going to have on your operation can be detrimental, and worst case scenario, you could end up finding that your business has to close. Now, even if your business doesn't close, we have to start thinking about, well, actually, if the business operations are impacted, what impact is that going to have on the brand of my business and on the reputation of my business? And obviously that's going to impact how well your business does in the long run. The great thing about this is that it can be resolved by, really easily resolved by what we call a business lasting power of attorney. Now, lasting powers of attorney, or LPAs as they're called for short, aren't just for the elderly. They, properly executed, they can really ensure that the right people step into your shoes at the right time to ensure that your business continues smoothly and that operations aren't affected, and all those questions that we asked earlier, they don't arise really. And so it's really easily done. I'm going to be talking to you more about business LPOs in our next seminar, but it's just something that I wanted to highlight so that you can think about it in the structure and the agreement scenario. The other thing that I will mention really quickly before we move on is that for those of you who want to set up a family business or have set up a family business, is perhaps you should be giving some consideration to having a constitution or a charter within that family business scenario. And the good thing about these are that when there is a family-run business, then these constitutions and scenarios will ensure that there is a policy or a process to talk about the roles of the different family members within that business, and also to talk about what happens if we find that that particular family member is all of a sudden unavailable or passes away. Now, it's obviously very important to ensure that that family member also has their personal documents in place which synchronize well with those charters and that constitution. But it's something that I think those of you who are looking to set up a family business, it's worth giving it some thought.
Okay, thank you, Sangeeta. One thing that occurs to me when you were talking, have you had a situation that you can think of? I'm sorry to just in case you've not thought about this, but have you had a situation that you can think of where you've reviewed someone's documents, or perhaps it's been later down the line, and say, for example, a will has been in conflict with a business document that they've had in place, and that's caused problems for the family?
Yeah, we come across it quite often, and the good thing is that if it's reviewed in time, then sometimes the documents only require very small tweaks or small changes which can make a significant impact. The worst case scenario is that if we find out after the fact and where we can't reverse that situation, and it's like what I talked about earlier, is if, for example, you have a situation in a business scenario that can't be changed, then the most significant impact is the tax liability is most likely going to be much higher than it could have been or should have been.
Okay, and actually that brings us quite neatly onto tax. So I know we're already quite a way through the seminar, so we don't want to send you all to sleep. So we promise we'll try and make it a bit interesting. We're going to just talk really briefly about tax and actually how tax might be able to work better for you.
Okay, thank you. So tax is a big factor that most of us take into consideration when we're making our financial decisions. I remember I had one client who had me draft within his health and welfare LPA that he wanted his attorneys to prolong his life for as long as they could if it was tax efficient to do so. So clearly some of us take it more seriously than others, but you know, as Louise said, there are tax considerations that we have to think about when it comes to the business scenario. Now, the taxes that I'm going to concentrate on today are income tax, capital gains tax, or CGT as it's otherwise known, and income tax. These are taxes that most of you will pay personally as opposed to your business. But the reason why we're going to talk about these today is because the amount that you pay personally is going to depend on the way in which your business is structured and the way in which it operates. Now, if we move on to, for example, income tax, when you take money out of your business, you pay income tax on that money that's received. Now, that could be by way of salary or it could be by way of dividend. At the highest level, if you're an additional rate earner, you could be paying 45% in income tax for that revenue that you receive from the income. So it's really important that some consideration is given to whether you are making the most efficient use of how to retrieve that money and how to extract it from the business. Now, I've assisted a lot of clients, quite a number of clients, in looking at the structures that they hold and in trying to reduce that liability. One of the ways in which I did that, we had clients who had rental property portfolios. And what we did for some of those clients is we transferred those property portfolios into a company structure. And in doing so, we were able to reduce the 40% income tax that they were paying on that rental income down to 19% in corporation tax. So now this scenario doesn't necessarily work for everybody, but it's just an example of the way in which we work with clients and the way in which we look at your scenario and your circumstances to see how we can maximize the use of your estate and your affairs and reduce the amount of tax that you have to pay. If we move on to capital gains tax, now the same goes for capital gains tax. Capital gains tax isn't just relevant for when you sell your business. Capital gains tax is also applicable if you are disposing of your personal assets and also if you're disposing of parts of your business as well. Now, in the past, we've helped a client reduce his capital gains tax liability from £100,000 to just £3,000. And now you may think, wow, that's a significant amount. I assure you there was no magic, there was no dodgy schemes involved. All we did was we maximized the use of the reliefs and the exemptions that were available at the time to ensure that this client wasn't paying any more than they had to. I know of a recent case where a business owner who held shares in a business sold his business and ended up having to pay 20% in corporation tax. But had those shares been held in a different way, we could have actually reduced that tax liability to just 10%. So we could have halved that liability to the taxman. So it's really important that you and your accountant work with somebody who's able to have a look at the tax implications of your business. And I say accountants because not all accountants look at tax planning. Sometimes some accountants are just transactional. Now, if we move on to inheritance tax. Now, inheritance tax, I think, is a really important tax for you to take into consideration when you're looking at planning. And as I mentioned earlier, some of you may think, well, actually, I'm not going to be around. It doesn't matter. You know, I'm not going to have to pay the tax, so why bother? But again, if I take you back to thinking about what are your life objectives, what are your goals? And if those lifetime objectives and if those goals involve your family members, then remember that the amount that your family members ultimately receive from your business and your personal estate, okay, is going to be dependent on how much inheritance tax they pay. So it's really something that you need to consider, because the changes that you make are going to impact the amount that they then ultimately receive. Alternatively, we've been talking today about charitable goals. For those of you who want to make a real social impact, if you're thinking, actually, again, I'm not going to be around, it's going to go to charity, the question you need to be asking yourself is, who do I ultimately want to receive my money? Do I want that to be the tax man, or do I want it to be the charity that I've been working with during my lifetime? Again, the good thing here is that a lot of you will be able to reduce that inheritance tax liability by claiming a relief that's known as business relief. It used to be known as BPR, or business property relief. So some of you may be familiar with this terminology, but now it's called business relief. Now, it's really important that you have somebody look over this for you and you take great care with it, because the criteria is really specific. And the HMRC are really keen to challenge these claims for relief where they can. Now, the way in which you manage your business, the way in which you structure your business, and ultimately the way in which you sell or transfer your business will impact the amount of inheritance tax that you pay, and whether you're able to claim business relief or not, or whether your estate is able to claim business relief or not. A short while ago, I had a client who'd come to me. Now, this was a double glazing business. He owned the shares of his company, and he held the office building in his name outright. So it wasn't in the company's name, it was in his name. He decided that he wanted to retire. The son was going to take over the business. And so he transferred the shares into his son's name, but he held on to the business office as a retirement pot, if you like, so that he can continue receiving the rental income. Now, he came to me after he had transferred the shares in that business to his son. Had he come to me earlier, he would have known that by virtue of holding those shares, he could actually achieve a 50% discount on the value or the inheritance tax that was liable to be paid by his estate on that office building. But now, by having transferred those shares into his son's name, he will have to pay 100% of the inheritance tax that's due on that office building in his name. So that's a significant amount. Now, that office building was valued at £2 million. And now that's a tax liability of £800,000, which could have been very easily halved to £400,000. And that's a significant amount there. Now, as you can imagine, this particular client of mine wasn't very happy. He, like many of yourselves out there, he set up his business from scratch. He worked really hard. He was very proud of what he had achieved, and he thought he was achieving his lifetime goals in actually passing it on to his son. And at the time, it was probably the most sensible thing to do. He was retiring, he was passing on the legacy. So from a short-term point of view, yes, great. But from a long-term objective, you can see he didn't quite achieve everything that he set out to do. Now, for this particular client, we were able to do something for him, but we weren't able to bring him back to the rate that he could have, or achieve or maximize the tax reductions that he could have had he come to us slightly earlier. So it's really important to appreciate that sometimes your actions, or most of the times your actions, will then have an impact elsewhere in your life. And I can't stress enough the importance of making sure that we look at everything, or you look at everything as a whole and holistically. There's very little point in making or reducing or mitigating a tax liability in one area, only to then find yourselves increasing your tax liability elsewhere.
Okay, thank you, Sangeeta. The last thing that we're going to talk to you about today, and we will be brief because we do want to have some time to get to your questions. We're just going to touch on special provisions that some of you might feel that you should make, perhaps if you've got vulnerable family members, or if there's anyone you know that's in this situation.
Yeah, so as Louise said, I'll be very short and very quick, but if you do have a family member or others that you want to make provisions for who are vulnerable, then this is something that you need to give some thought or some consideration. Now, it's really natural for us to want to provide for our loved ones, but there may be some out there, some of our loved ones who need a little bit more help. And that may be because they lack the mental or physical ability to do so. And sometimes it may just be that they're susceptible to be taken advantage of outside, or that they don't necessarily have the aptitude to understand how your business operates or how it's run. The key thing that you're going to want to do here and in these scenarios is that you're going to ensure that your will and all the other documents that we've been talking about today are properly properly written, so that there is a structure and a mechanism within those documents which allow you to nominate trusted advisors who are ultimately going to be able to look after your assets on behalf of those loved ones. I mean, today we've been talking to you about succession planning, and we've talked about different elements of succession planning. But what's really important to understand is that we need to look at everything overall to ensure that we're achieving everything that you're setting out to do, and ensuring that it works for you in the way that you want it to work for you.
Yeah, thank you, Sangeeta. I just would reiterate that's really the message that we want to get across today, that your business and your personal lives, they overlap, they're bound to. Things that happen in your professional life are going to impact on your personal. And just so many people that we meet, we find, are not taking advantage perhaps of all the tools and all the different structures that there are available to make sure that one's complementing the other. And the other thing that, that we do with entrepreneurs, and we find that we need to do all the time ourselves, being entrepreneurs, although we are solicitors, we're all consultant solicitors in our firm, so we run our own business within a business in a way. And one thing that we found is we need to keep looking at what our goals are, both professional and personal. When I started out working in my 20s, my goals were perhaps quite different than they are today. And so what we would say to you is think about looking at your goals almost in the same way that you review a business plan on an annual basis, and sit down with someone to talk about what your goals might be, and succession and tax planning might be things that are touched on in those discussions. And a bit like having regular meetings with your accountant or insurance broker, it's also really important just to make sure, as I said, we've got this special opportunity with COVID to make sure that we are really living the lives that we want to live, and working out where we want to be in 5 years, 10 years, 15 years, and if we're going to be able to do that based on how we're working at the moment. So that brings us to the end of today's first talk, to talk about your goals, and we'll be touching on things on the 17th of November and also in January in a bit more detail in certain other areas. But I think for now what we're going to do is we're going to ask some questions, or not ask questions, we're going to answer some questions. Although before we do that, I'm going to click on this. Before we do that, can we just run our poll one more time, just out of interest, to see if we are in the same place? So here we go. Do you think your business is structured in a way that will allow you to achieve all of your goals and ambitions? So, oh gosh, there's 100%
Wow.
on that right now. Okay, so I'm not sure how long it will take for the poll to finish. Okay, it's moving, we're moving a little bit. So if you're comfortable, again, this is completely anonymous, and it's just to give us a bit of an idea. So I think we're near potentially the end of the polling, and the numbers have jumped up. So 69% don't feel that the business is structured in a way that's going to help you achieve your goals and ambitions. And actually, nobody thinks yes. So potential for all of you to think a bit more about the things that we have discussed. So if my IT skills do not fail me, I think we can both access some questions here. Okay, so I'm just going to ask the questions and put them to you, Sangeeta, although I think you might be able to get them on your screen as well. So somebody's asked, I have a family business. If I die unexpectedly, what resources do my family members need to hire someone to replace me?
Well, that's a really good question. So that's going to go back to what does your shareholders agreement say? What do the policies within your business say? Do you have a will in place? And does that will provide for a mechanism in which your family members firstly have the right to manage or make those decisions? So it's really going back to make sure that your personal documents such as your will have the right terms and clauses in it, and also then looking at how your business documents work and what they and the contents of that as well. The key documents here probably for yourself are probably going to be your shareholders agreement and your will to decide that.
Okay, thank you. Okay, someone else has asked, during the presentation, you mentioned a business will. What is a business will?
Okay, so a business will is a term. It's not a official term that's in law. It's just a term that we use for our wills that are slightly more complex and cater towards the entrepreneurs like yourselves out there. And really what we do with our business wills is we go into a lot more depth about how your business is going to be transferred to your loved ones or operated by your loved ones when you're no longer around. And some of the things that we look at for business wills is we can look at trust structures, we can look at what happens whilst the administration of your estate is going on. So if we need to appoint special trustees or executors or directors whilst that's happening, who ultimately will receive or the benefit of your shares, who's going to operate the business. So those are the sort of conversations that we have with you and make sure that your will is then catered to address all of that when you're no longer around.
Okay, thank you. Okay, a bit of a controversial question. So this is talking about lasting power of attorneys. Somebody's asking why can't they do it themselves? Why can't they do it themselves, Sangeeta? Can they?
So the thing about the law is, and no doubt, Louise, you'll probably say the same thing about with divorce, is the thing about the law is everybody can do everything themselves if you have the knowledge and the ability and the time to do it yourself. Okay, and the same goes for wills and LPAs. I mean, these days you can get wills online for about £10. But the key here is that an LPA is effectively, on the face of it, it's a form filling exercise. So you're just inputting some data. The importance about this is, though, especially when you're doing executing things like a business will, is the content within those squares or those sections. So within LPAs, there are sections called the guidance and the instruction section. Now, unless you have knowledge of the law and actually understand how it interacts, you're not going to A, know what to put in there in the first place, perhaps, but B, if you do put something in there, you're not necessarily going to know whether it works in law and whether it will be valid. So, for example, a lot of people, when they're executing LPAs, don't realize that unless you put specific express clauses in there, if you have stocks and shares, which a lot of you may probably have, and that includes stocks and shares in your own personal business, and you have a financial advisor or other people that you delegate work to, unless you put express provisions within the LPAs to say that you allow that delegation to continue, in law, it's not allowed. And so you then have to go to court to seek the court's permission, which can obviously cost significantly more. So the importance about what I say is, in terms of getting advice, is having somebody help you filling in those questions and asking the right questions, so we can then ensure that the right terms are put in within the LPA and the will as well.
Okay. Okay, so another question here. How do I know if I need business succession planning?
If you have a business, you need business succession planning. So the idea is, if you're planning to sell your business, then you're going to operate your business on the basis that, okay, I have my business in 2020, I want to sell it in 2050, or 2025, for example. The thing is, we don't know what's going to happen between now and then. And with everything else, wills, LPAs, acts something a little like your key person insurance. Is what happens in a situation which I'm not planning on for it to happen, but if it does happen, then I want to make sure I have documents in place to address those situations, and that's where business succession planning is really important.
Okay. Now this might be this question might be too big to answer now, but somebody has asked, is there anything in particular you would mention now that we need to think about because, you know, we're in the midst of leaving the EU?
Okay. So generally, if your business is operating within the UK and you don't have an international arm, or you don't have international suppliers, then it may not impact you as much. Okay, but if you do have European connections and European assets, and even personal assets, if you have European assets or European connections, then it's something that, yes, we're looking at, but there are things that we can do at the moment to put in place to ensure that you're not impacted significantly by what may or may not happen with the Brexit. So I know there's a lot of conversation of, are we going to have a trade deal or not? But at the moment, we're working really closely with clients to understand what their businesses are and how, if at all, they're going to be impacted by Brexit at all.
Okay, thank you. I think we've just got time for one more question, although there are a few other questions that are very specific. And what I would say now is, I can see you can type answer, and I will try to type answers to all the questions that we've got here. And if they disappear at the end of the webinar, then you can see our email addresses on the screens. And if there's a question that you would like to ask us and it hasn't been answered, then please do feel free to email either one of us, and we will make sure that we will get back to you in the next day or so and answer your question. For example, I can see somebody has asked just for some more, just for some signposting, really, for some more information. And of course, we can do that if you just send us an email, and we will help you with that. But I'll just deal with one more question. And somebody here is saying they are thinking about selling a business. And is there just the top 3 things that you think that they should be thinking about now?
Okay, that's a big one. So I think one of the things that you should probably be looking at is, how is your business structured and how do you intend to or want to sell your business? So this is probably more for the people that are going to help you sell the business, so the corporate lawyers, but that will be impacted by the way in which you structure it. So do you have a limited liability company? How are the shares held? Are they held in a way where when you then sell it, ultimately you're able to achieve the maximum sell price and also tax efficiency as well? So for example, different shares held in different ways will attract different tax reliefs. So the structure is really important, and the same goes for if you're a sole trader or if you're a partnership. We should be thinking about, how is it structured, and is this going to, when I sell it, am I going to get the most out of it? Also, the other thing that you should be thinking about is what happens during that sale process. If something happens to me, do I have the right documentation in place that somebody can step into my shoes if I'm not able to complete that transaction? And I would say, what are you going to do with the sale proceeds? I think you should start giving some of that thought now as well. When businesses are sold, they're not sold in the same way as houses are sold. So you don't necessarily say, right, I'm sold today and then I've got the money in my bank account. There's a stack. Depending on the type of business you have, you will have a staggered sale. So you won't necessarily receive all your sales or proceeds up front. And some of you may even be asked to continue as consultants within that business to help a smooth transition for the new owner. And so it's really important to speak to somebody about, well, okay, fine, I'm going to have an X amount of cash. What do I do with it? How do we make sure that if it's reinvested in the right way and efficiently?
Okay. Thank you, Sangeeta, that's really helpful. I think that brings us pretty much to the end of the time we've got. I think we're just going to have a few words from Chloe, and just to remind you all that the next seminar is on the 17th of November, and then we'll on January the 16th. Is that right, Sangeeta?
Oh.
But anyway, so the next, but I'm going to hand back over to Chloe now, and I really hope that you've all enjoyed it, because I've certainly enjoyed taking part, and I hope people have found it useful. I'm sure we both hope that. Thank you.
Thank you.
Louise and Sangeeta, thank you so much for joining us on this webinar. I'm sure our audience will agree that was a great session. Do you have any final words before we sign off?
I think just, you know, just try and remember that your personal, your professional, they're going to overlap, and make sure it's all working together, because what else are we working for? You know, we're working to achieve our personal goals at the end of the day for ourselves and our family, and let's just, you know, make sure we achieve them faster and the way we want to.
Absolutely.
Fantastic. I have included Louise and Sangeeta's emails in the comment section. So if you do wish to get in touch with them with any questions or for requests of slides, then you can do through those links. If there is anything you'd like to catch up on from today's session, we'll be sending out a replay of the webinar coming at 5 p.m. today. You can find the replay and future webinars at www.freshbusinessthinking.haysummit.com or by clicking on the link in the comment section. Part 2 of the webinar series with Allard Bailey will be coming on Tuesday the 17th of November, so please do keep an eye on our schedule on the website and we'll keep you updated. Thank you very much for joining us today, and thank you again, Louise and Sangeeta.
Thank you.
Thanks.